Good morning, everyone. Again, welcome back. Thanks again for logging on and joining us for our FY2020 results presentation. Joining me now is our CFO, Mr. Christian Barnard, and over the course of the next while, we'll be taking some of the questions that have been sent through via the email address provided. And without any further ado, we'll kick off with the first question. Christian, do you want to just take us through that?
Good morning, everyone. So we received our first question from Marzi Capital. Quintin, the question is, what relief measures were granted to tenants? For how long? And have there been any relief requests outside the retail portfolio?
So in terms of that, what our approach has been is very much a triage approach. So we identified which of our tenant base would be in need of immediate, what we would call life support or cash flow support, and that was provided in the form of a immediate cash flow relief through the deferment of rental apportions or the whole of the month's rental payments. However, when we say deferments, we mean that the funds that are owed will be repaid over a period of time. So the one approach has been to look at May, a portion of May, June and July potentially, and then recover that, and the strategy is to recover that in full before the end of the FY2021 financial year. It's also imperative to know that as a business we do an analysis in terms of the tenants' financials, but we also do understand that given the current environment, tenants' financial positions may have deteriorated. So there is an element of risk, but we do believe that the tenants that we have entered into arrangements with, they do have the ability to perform, and we also do hold both bank guarantees and cash deposits as additional security.
Thank you. We received a few questions from Stanlip, from Nessie Chetty. I'll just read them one by one and you can answer. So, I see from last night's President's speech that most parts of the country will be heading towards lockdown level 3 towards the end of May. Certain high infection rate regions currently, like Johannesburg and Western Cape, may not move. Does that alter your thinking, assumptions regarding rental collection in June and July? Also, how was March and April rental collections?
Thanks. So in terms of the President's speech last night, we have, since last night, actually been in discussions with the provincial government, and I do believe that the Western Cape government will be presenting a proposal to national government to show that irrespective of the higher infection rate within the province, that the province's readiness program is very robust and able to handle the infections and the growing infection rates across the province. That being said, in the scenario plans that we've done, we have effectively taken all the data we have at our disposal and we've segmented which of our tenants can operate from level 5 right down to level 1. And we are pretty comfortable that given the performance to date of our recoveries in level 5 and level 4, we haven't even reached level 3 yet, have been sufficient to cover both Spear's operating expenditure as well as its bond interest with additional funds to see it through in months ahead. Our focus really at this point in time is to work with government and with the provincial government, and we were also obviously very encouraged by the fact that the President did note in his address that there have been certain shortcomings or errors made during level 4, and they would look to make certain adjustments even if we are kept at level 4 as a province to open up certain other parts of the economy that have not been able to trade under the level 4 regulations. We do, however, take this opportunity to note that a level 3 and a level 2 scenario is far better for every real estate owner in South Africa. And I did touch on the March and April collections in the presentation. We recovered well in excess of 90% of our rentals billed for both March and April 2020.
The second question from Nessie is, do you have a rough estimate of what portion of your tenant base is receiving relief from SA government in terms of stimulus? We'll give an idea of how they will be able to cope after we get out of COVID-19.
So in terms of stimulus received, we have been in discussions with numerous tenants that have received the TERS COVID-19 relief in terms of their payroll, which has allowed them to continue employing their staff and in certain instances the ability to service our or their rental commitments to Spear. However, a deep dive at this point in time, given the fact that the lockdown has been in place, has not been possible in terms of a deeper analysis of which tenants have applied for, whether it's the Oppenheimer funds or the business partner funds, etc., etc. But we have clearly communicated to our tenants, and again, we'd like to thank SAPOA also for their active engagement. We've provided all our tenants with all the relevant links to all the different relief packages that have been offered, and we try.
Yes. Okay.
Welcome back. We apologize for that slight drop in the broadcast. Unfortunately, this is live, so things do happen. We're not 100% sure where we may have dropped off on the presentation, but if we haven't answered any of the last questions that before the drop-off, please just feel free to email us again and just to say that whatever question was asked was not answered 100%. I've got a couple of questions here for Christian from 361 Asset Management. Did you consider not paying a distribution for the FY20 year?
Well, in line with the JSE regulations for REITs, we decided to pay out a dividend post 4 months of the financial year end to avoid any unintended tax consequences, as they can be quite severe, being taxed at 28% for keeping any capital back in the business. As Quintin mentioned earlier, we prudently provide for any capex requirements, so we're very comfortable in that regard. In terms of the guidance going forward, as Quintin mentioned, we will only talk to it to the post our interims, more or less around October, November 2020.
Thank you. And then another question was, congratulations on your Liberty Life building acquisition. Can you share with us what is the financing rate expectation?
So we've already engaged with our funders and we've agreed an all-in rate of 8.54% for the term of the funding.
And what would, I know you mentioned the initial yield, is that still unchanged?
Yes, so the initial yield and acquisition date will be 9.3%.
Thank you. And then another question here. Congratulations on the adoption of the SA REIT Association best practice guidelines. You seem to have been the first in the sector.
Yeah, when it was released, we as the executive team reviewed it and we decided to early adopt it, specifically for the reason that the disclosures provides a very clear and accurate and see-through disclosure into any company, and thus we believed it will be prudent to provide such information to our shareholders, as they will see exactly what information goes into our disclosures.
Okay, thank you.
Cool. Then I received a question from Perpetua for you, Quintin. What exactly are the banks saying during negotiations? Are they willing to flex covenants if this is required?
I think it's a very good question, and I want to just state that at this point in time there are no negotiations with the banks. It's a very well-established business relationship that we have with our funders, and the engagement that we've had to date with both Nedbank and Standard Bank have been extremely proactive and productive. The general consensus across the banking sector is that if you have maintained your account in good standing and you have serviced your interest commitments and capital if required, then the bank will ensure that they would be that bridge over troubled water when it does arise and if it does arrive. So from that perspective, I think if you look at the sector as a whole, and again, the property industry group led by industry veterans have also been engaging with the Banking Association of South Africa and a variety of other corporate bond holders to also work with them, given the fact that if there were to be any breaches, it will be a sector-wide breach in terms of LTVs and ICRs, given the fact that COVID-19 is a pandemic and it's not, and any drop in ICRs or increases in LTVs is effectively not being caused through any form of reckless trading, but purely from the disease itself.
Thank you. Another question for Perpetua. Is it possible that you may renegotiate rentals with tenants prior to the scheduled lease expiry dates?
Yeah, so I think, there's an age-old saying that you can never really waste a good crisis. So I think what we have done is, we've realized that we're all in the same storm here. We may be in very different boats at some points in time, but as and when a tenant has reached out and requested either cash flow relief or rental deferment, we have come alongside them and said, in order for us to provide you with X form of relief, we are going to require an extension of some sort on your lease terms to ensure that whatever we give up from an opportunity cost perspective right now, we are able to at least see it through in a longer form of lease. That does, however, assume that within the current environment that tenant does survive, but nevertheless, it's been very well received and has definitely been seen as a fair and equitable process going forward.
A question received from Catalyst. Can you give some insight to what alternative use and or plans for the hospitality assets you are working on or considering, especially as they are excluded from your mid and high road, and could you, and these scenarios is resolved?
So I think, as a business and, being only focused in the Western Cape, it gives us a lot of opportunities to be entrepreneurial. And I can assure you that over the last 7 or 8 weeks, we haven't been resting on our laurels. We've been very busy restructuring leases and thinking about the future as to, how we would pivot certain parts of our portfolio that were not able to operate. And the hospitality assets are definitely come front of mind. We are currently looking at a variety of alternate use options for those assets, knowing that those assets are fully fitted and ready to become operational in whichever shape or form it does happen. And obviously within the government lockdown regulations, we need to make sure that whatever plans we institute does not breach any legislation. But I assure you that we are doing everything we can to try and create some level of opportunity within our hospitality portfolio.
And the final 2 questions we received from a representative of the Financial Mail. The first one is, are you looking to sell your hospitality assets?
I think I'd like to maybe expand on that question. Within this business, there are no holy cows. And I think, as a owner of assets, we believe that, if there's a willing buyer and a willing seller, and the price is right for both management and for shareholders, then we'll consider all of our options. Spear is very fortunate that management still controls 32% of this company. So shareholders can be assured that management will act in the best interests of all its shareholders going forward. And that being said, if there are people out there that have got deep pockets and coming at the right time, at the right price, across the portfolio, we would look at, we consider our options and present them to our investment committee for consideration.
Another question from the Financial Mail. How quickly do you think Cape Town's hotel occupancies and revenues are likely to recover once SA moves to lockdown level 1?
I think one thing we have seen is during these different risk-adjusted levels is the predominant uncertainty as to when airports will reopen. So I think the first thing for us is to understand when airports will reopen. And I think the next step in our view will be a more local market-driven recovery on occupancy as opposed to rate. And secondly, we anticipate probably closer to potentially January next year, given the fact that there's American elections, that the UK has been affected by or severely affected by the COVID pandemic, as well as other parts of Europe. We do anticipate a level of recovery from certain parts of the German market and the Dutch market during the FY2021 year. But by and large, we see that there will still be a low level of revenue growth on a rate per room basis going forward, where occupancy rates may increase far ahead of that.
At this point in time, we have no further questions. If we did miss anything, we apologize. It might have just been missed in our email inbox. Please mail us and we will continue to monitor it, and we will try and respond to you directly via mail if it hasn't been already addressed any of the other questions that has been asked.
Thank you very much for joining us, and we appreciate you taking the time. We appreciate your interest in our business, and we assure you that as hands-on managers of our assets, that we would do our best to deliver continued results in a very, very tough trading environment. Our thoughts and our prayers go out to those that have been affected by the COVID-19 pandemic, and I would like to just take this opportunity to wish you all well, and God bless.